Welcome to MarketSnap's daily market rundown. The market is wobbling, gas is back above $4, and the AI trade everyone was betting on just got a reality check from China. Let's dive into a session that felt like a tug of war between geopolitics and earnings anxiety. The major indexes ended the day mixed, with the Dow closing down about 0.6% and the S&P 500 slipping 0.2%. The Nasdaq, however, managed to eke out a near-flat finish, down just 0.05%. It was a day of recovery attempts, especially in the semiconductor space, after last week's AI-driven sell-off. The VIX, the market's fear gauge, actually fell a bit, settling around 18.6, signaling that while nerves are frayed, there's no outright panic. The big story today was the rebound in chip and AI-adjacent names. Lumentum was the S&P 500's top performer after a Barclays upgrade, and Credo Technology surged over 4%. Alibaba was also a notable gainer, up nearly 5% as Chinese tech showed some resilience. On the flip side, the losers list was a who's who of recent high flyers getting hit. Tesla dropped nearly 3%, Oracle fell 4%, and SpaceX continued its slide, losing another 3.3%. The biggest headline grabber was HDFC Bank, which cratered over 10% on no specific company news, reminding us that emerging market volatility is still very much alive. Among the megacaps, it was a mixed bag. Nvidia was essentially flat, while Intel managed a 2% gain. Apple bucked the trend, dipping 2% despite hitting all-time highs recently. The real action was in the options market, where traders placed a massive $550 million bet against Tesla ahead of its earnings. On the volume front, Nvidia was again the most active stock, followed by Intel and New Holdings. But the standout was Iron, the AI infrastructure provider, which surged nearly 20% on news of $2.8 billion in new deals, easing some of the anxiety around massive data center build-out costs. AMC also saw a massive spike in options volume, surging 26% on pure speculative frenzy. Zooming out to the weekly performance, it's all about energy and value. PayPal is the top weekly gainer, up 23%, followed by Cintas and Equinor. The energy sector is clearly benefiting from the geopolitical risk premium on oil. On the losing side, it's a bloodbath in tech. IBM is the worst performer, down 28% for the week, followed by Astera Labs and SanDisk. This is the hangover from the AI euphoria, and it's hitting the memory and networking plays the hardest. Sector-wise, energy is the only bright spot, up over 1% on the week. Real estate and financial services are also holding up relatively well. Technology is the clear laggard, down nearly 5% on the week. Communication services and consumer cyclical are also feeling the pain. This is a classic rotation out of growth and into safety and value. The dominant narrative today was the escalating AI cost war between the US and China. Moonshot AI's Kimi K3 model is reportedly matching WEM performance at a fraction of the cost, which is spooking the market. This isn't just a headline, it's a fundamental challenge to the spend whatever it takes thesis that has powered the AI trade. Meanwhile, the US-Iran conflict continues to simmer, with Brent crude briefly topping $90 a barrel, keeping energy stocks bid and adding to inflation worries. This is the week that will likely define the next leg for the market. We've got a massive slate of earnings, including Alphabet, Microsoft, and Tesla. The bar is high, and the market is pricing in perfection. Any sign of weakness in cloud revenue or AI commentary could trigger another leg down. Homebuilders like PulteGroup are also reporting, giving us a read on the housing market in this high-rate environment. You can find exclusive earnings transcript summaries on MarketSnap. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. The next 48 hours are critical, so stay sharp. Don't forget to check out our detailed SWOT analyses on the names we covered today to build your long-term game plan. We'll see you back here tomorrow.